How owning a business as part of your financial plan is a good idea, and how do you do it? We'll address this and more on this episode of Through the Pines. Welcome to a financial planning podcast with a down-to-earth vibe. Sasquatch listens while balancing his accounts. This is Through the Pines. Let's introduce our financial wizards with us from this episode. Planwithbaxter.com. We do have Rex Baxter, Brandon Smith, and Dan Nelson. Like our Facebook page, Through the Pines on Facebook. We have an Instagram as well. Follow that at Pines_podcast. And then, of course, on our YouTube channel, Through the Pines podcast. The lucky winner. Follow, subscribe, and be number 31. Because we just started it and we're at 30. You could be lucky 31. Be pretty great. So thanks. I appreciate that. All right. Owning a business. And we're assuming these are, this is part of your portfolio. Rex, I just need you to tell me, did you really come up with these 3 pillars of wealth? And they include equity markets, real estate, and business ownership.
Well, like all great ideas, I'm sure that I probably
borrowed a little
and tweaked them from somewhere. Okay. Although I'm not sure where. I don't know that I've necessarily heard them put in this way, but I do have a strong belief that there are 3 pillars or three ways that wealth is really created. When you think about the wealthiest people you know and how they got their wealth, even if they ended up inheriting it, the wealth probably originated from one of these 3 areas, either from the financial markets, meaning that they bought, a particular stock, 20 years ago, 50 years ago, whatever the case may be, whether it's in real estate or whether it's owning a business. And, when you look at the wealthiest people, they do all 3 of these. And so we thought it'd be fun to have one of our podcasts kind of focus on each of these. We've done quite a few on the financial markets. Recently just did one on real estate. And today we're going to talk a little bit about business ownership and kind of what we've seen and some of the psychology that goes into that.
I like it. Okay. So business ownership, I mean, obviously you've got to have a passion about the business you're going into. And hopefully it is profitable. But how does, if you're owning a business and it's part of your financial plan, usually I don't think business owners think about it in those terms. They probably just think like they want to own their own business. And then maybe what they should consider is that they need to invest in equities on the side and also potentially own some real estate. I saw, I think it was a commercial or something. Actually, it was a financial agent earlier talking about how Chick-fil-A set up their business to succeed because they own the dirt and the properties and the way that they run their, but you would be familiar with this, Rex, the way they run their business is, the way they, because they're not owners, right? They don't have like franchisees. It's like different or whatever. It's sort of
so it's not even franchisees. Chick-fil-A is a really unique animal to where it's a private company and the company owns the stores. They own the company owns the entire business, and the operators operate the store. And so essentially with a company like that, which is a little bit unique, you buy into, for a very nominal amount, you buy into for the right to become an operator, and you go through their training, you go through their regimen, and then you end up operating the store. And that typically generates an amazing income for most of those operators during their lifetime or during their working career. But then when they go to exit out, they don't own an asset. They don't own the business. And so essentially they just exit out. They don't get to sell anything. There's nothing to sell. And so there's no asset. And so it's in a situation like that, it's extremely important to leverage that income and make sure that you're saving more so than most, because now you're used to an extremely high income lifestyle, and yet you have no asset at the end to sell to replenish that income during your retirement.
So is that a bad example for this particular show because most businesses people sell?
No, I think it's a great. I think all of these are great examples. Okay. I don't think there is a bad example, or because I think everyone is unique in its own way. And so I think as we go through kind of this discussion, I think pulling on a lot of different kinds of businesses is important for us, because I think each one has its own unique attributes. And luckily for us, you have Dan with 40 plus years of experience of working with business owners and seeing a lot of different kinds of businesses. You've got myself with 25 plus years of experience, and Brandon with, over a dozen. And so,
12 months at least.
12 months. Yeah.
A dozen months.
I mean, you're talking over 70 years of experience of seeing businesses and business owners and the pros and cons and intricacies that they're involved in that are sometimes multi-generational. And so I think let's dig into this a little bit. Let's talk about a couple different kinds.
Well, yeah. What are the pros of owning a business as being and you mentioned in a previous podcast that you preferably would like to see your portfolio split in thirds between a business, real estate, and equities. But if your business is sort of the main driver there, what are some of the benefits of using your business as the main entity in your portfolio? Brandon, do you want to answer that?
So I've got a story. So this is actually years ago. this is years ago, but I was meeting with some business owners that owned a business that it had kind of been founded and really run by one guy that retired and sold the business to these younger business owners, and they had equity ownership in the business. And I remember talking to them about it, and they're like, but I don't know who would want this, right? Like, why would I want this business? I just need the income, right? And we talked to them, we kind of dug into the financials and said, no, this business has real value. Sure, it can produce an income, but there's a value to the business because it has profits, right? It has profitability. And they said, well, it was really kind of funny. They didn't really have a ton of interest. And so we actually ended up listing it for sale, had a third party come in and buy it for a pretty significant amount of money. And it was just kind of funny to watch that all transpire, right? Because, oftentimes you have business owners that don't necessarily know how much their business is worth. Right? They don't know if they were to sell it today, how much could they sell it for? And if they wanted to sell it in 2 years, what things could they do over the next 2 years to make it sell for more money?
Well, how do you find that out, Brandon? How do you know how much your business is worth?
So there are professionals that will do that. A lot of CPAs will help them value the business. But the general way that a business is valued is that you take the revenue, right? So how much revenue is that business generating? And then there's what we call a multiple. And various companies have different multiples. And so, for example, a dental office will have a multiple, meaning that, and I don't know what a dental office sells for, but it might be 2 times their revenue, right? And so or 2 times the earnings. And so they'll look at it and say, how much money is this making multiplied by 2, and that's what the selling rate would be. Another, a factory might have a higher multiple, might have a 4 times multiple, and so they look at how much they're making, they multiply that by 4, and a lot of it really comes down to how intricate. Like, if you have an investor that wants to just come in and buy, do they need like a doctorate degree? Do they need, like, how hands-on is it, or can they just buy it and the business is running, as automated as possible? And so knowing that, right, as a business owner, you want to try and increase 2 things, right? Increase your revenue, but then also put into place processes that make that business as automated as possible.
Dan, over the years, what's your experience working with entrepreneurs, solo businesses, smaller LLCs versus larger businesses, and some of the pros and cons of each of those?
So it's business owners are good clients. They can make decisions quickly. They've had to in running their own business, and so you oftentimes will see them be able to diversify. And once they get the business up and running, that's always a good idea to have some other investments outside, or equities and maybe some real estate. But most of the time in the beginning part of running a business or starting a business, you try and plug everything you have back into that business. That's good in a sense that it's your love. It's what you want to do with your life, and it becomes a 24/7 job. Now, you have to love it if it's a 24/7 job. If it begins to run you instead of you running the business is running you, that's when people get themselves in trouble. So, but I've seen some very successful businesses, both franchises, where they buy a franchise on a business, or just open their own individual business. And then you say, okay, what is it worth at the end? Well, it's obviously, Brandon just talked about the revenue. You can times it by a multiple and get a revenue price. Then you might have the equipment separate. You might have the land separate. You might have a building that's completely separate from the business. And so it is an idea, if someone wants to own their own business, that they have to really love that business. And if they do, they don't mind working long hours, because you're going to if you own your own business. It just is just a fact. And any successful business, a business person would tell you that.
Just like real estate and equities, they don't always make money. So when do you know how to get out or sell a business, or what do you do if your business isn't making money?
Well, there's several ways that you can figure this out, but you have to, there's businesses that don't make money, but yet you still take income from the business, but they might not make a profit, but you still have a legitimate business that you're running and trying to grow. Eventually it gets to the point where hopefully you can make money. If you're running a business 5 and 10 years and you're never making money, and you're having to plug more money into the business to continue to get it to run, you should reevaluate, what am I doing with my life, my money, my savings, and is this really working? Most of the time people will bail out if that's the situation. If it's just a matter of a year or two in a bad market or a bad economy, but yet the business has great ideas and has a great selling ability, and people are interested in that business or the products that or services that you provide, then you have to have enough assets or cash flow to be able to get through those bumps.
Yeah, for sure. Rex, have you seen personality traits that equate to maybe better business operators than others? Dan mentioned quick decision makers, maybe confidence, something.
I think a lot of it comes down to the type of business will fit different personality types. And so, if you think of kind of an engineering mind that's, focused on numbers and focused on getting all the details right, somebody like that may not be great for a high service, more emotional kind of business. And yet you see somebody that's high on service and in the service industry, they may not be great at running a still fab kind of business where you're dealing with, exact specifications and things like that. And so I think you can look at your personality and kind of see what it's, where you focus on, and that'll kind of lead you towards different industries that might be a better fit than another for your personality trait. That being said, if you're going to be a business owner, then hopefully you're smart enough to surround yourself with people that may share your values, but don't share your strengths, that have different strengths that you can lean on than yours to kind of round that out. None of us are a full package as far as much as we would like to think we are. So
Rex is the full package.
Well, so one thing Rex is incredibly good at, and as far as one of the strengths that a good business owner would have, is being able to work on the business instead of working in the business. And I mean, I have seen that on both sides with various clients where, any business owner can find a full 24 hours of things to do in the business that should be getting done, that they can focus on and get busy on. But really, there are a few key metrics that absolutely need to get done in order for that business to be profitable. And so those people that can focus on the important things and accomplish those first and not get distracted by the whole mountain of other tasks, or finding other competent people to handle that mountain of tasks and allow them to focus on the important things is probably the best thing you can do as a business owner. We had one business owner in particular that was managing a large load, right? He had a very successful business. And I asked him, how many hours are you working, expecting to hear, 60, 70, 80 hours per week? And he said something like 30 hours. I said, how are you doing that? And he said, I've focused on putting together a very competent and quality, staff. And sure, he probably has to pay him a little bit more, but by doing that, it's allowed his bandwidth to expand and allowed him to focus on the things that are most important.
Yeah. And I think, Rex, that was Brandon asking for a raise.
Yes.
Yes, that was a nice little plug.
Very competent,
I do think, working on the business versus in the business, I think a lot of people, especially at the beginning, when you're talking about entrepreneurs, before they launch their venture, they're really focused at working on the business, putting together their strategic plan, how they're going to work on it, the pieces they need, and then they launch the venture. And a lot of them during that first, 1 year, 2 year, 3 years, kind of get lost working in the business and don't break away and take enough time to work on the business, to where they're taking a step back and focused on those things that only they can do, and being, self-aware enough to surround themselves and to plug in the pieces to do everything else. And I think that's typically a trait of a good leader, is saying, look, I'm probably the only one that can really see the direction and the strategic plan and the vision for this business. So I'm going to focus on that a little bit. And yet I'm going to plug in the pieces that can do the service or do the sales or do the marketing or can do the manufacturing or whatever the piece may be that they need to plug in there. And so I find that interesting when I look at different business owners and I look at what makes them succeed. There's a number of commonalities, and that is one of them, is being self-aware and being able to kind of work on it. Another one is grit, kind of focusing on fighting through and sticking with it, through the difficult times. So
business owners are very invested in their own business, obviously. Rex, have you found that they are a little tighter with their money when it comes to investing or spending some of it and putting it into the equity markets?
The more successful ones are, for sure, because they realize and understand how hard it was to make that dollar, right? They remember all the blood, sweat, and tears that went into generating that. And so it's hard for them to part with that, and they feel like they're giving up control, right? They feel like they have control, whether they do or not, whether it's real or perceived. They feel like they have control when it's in their own business, but when they take it out and they invest it, whether it's in the financial markets or the real estate markets or somewhere else, they feel like they're losing that control. And therefore that just feels riskier to them sometimes. And yet in the big scheme of financial planning, that diversification is critical for the longevity of their wealth. So
yeah. Dan, did you have a comment?
Yeah, I was just going to say something Rex just said is really important, I believe. In the early years of starting a business and running a business, I found clients that they really put their blood, sweat, and tears and all of their money, everything into making it successful. You have to have the grit and determination to always never give up. If it's the right business and it's something you love. Later on in life, as they run a business for 20 or 30 years, and now they're saying, you know what, I've got to figure out an exit strategy here. That's when they should start pulling money out of the business and investing it separately, either in real estate or in the financial markets, so that they have more of a three-legged stool as opposed to everything they own in that business. And then they can say, okay, what is my business worth? I know I've got this real estate on the side. I know I've got a great equity portfolio on the side, but what is my business worth? And how do I have an exit strategy? That's a key.
Rex, what are some of the programs that you offer as financial planners at planwithbaxter.com for business owners, like 401ks or the solo Ks? What was that one that we talked about?
Unit-K.
The Unit-K.
That's what you're thinking of. The Unit-K.
Yeah. What are some of the programs that business owners should maybe think about in contacting a financial planner?
So I frequently say if it involves a dollar, we're probably involved in it one way or another, legal ways, right? And so I'll qualify that. And so I think the ways that, there's certain products, whether it be retirement plans, business retirement plans that we get heavily involved in, whether again it's 401ks or SEPs or Simples. non-qualified deferred compensation plans, key man insurance, buy-sell agreements. Sometimes we'll get involved in group benefits, workplace financial services, things along those lines. And then on the personal side, we get involved in financial planning for the business owner, is working with them to make sure that they are diversified, working with them to make sure that we're trying to capitalize on that cash flow. If there's, tax strategies, then we can coordinate and work with their CPAs to try and take advantage of that, whether we're working on, stock options for the company, whether it's, whatever those issues are. And so I think there's so many different areas that we can get involved and help business owners with, that it's difficult to sit there and say, oh, this is the one for every business, because every business is so unique that it's different for every business as to where we need to focus and where we need to spend time with them on their business. And that's one of the beautiful things about our practice, is that we have what I would like to say is a very broad practice. We work with a lot of different industries. We work with a lot of different personalities and a lot of different types of businesses, to where we can lean on that broad experience and bring that and leverage that to you, the business owner, to your benefit, and say, look, this is pitfalls that we've seen, or these are a couple of strategies and a couple of processes that we've seen that have been successful, or here's some networks that we can plug you into to try and help you think outside the box and kind of make those connections. So does that make sense?
Yeah. Rex, I want to talk about side hustles, because a lot of businesses get started that way. And then, what are your recommendations that someone should have saved, or before they go full time and quit their job? But before we do that, Brandon, we're going to need some more numbers here. So what do you got?
You got it. So thought this one was interesting. Also, this one, our last episode we did JP Morgan. This was JP Morgan as well. But this one goes back to 1980, and it looks at the average intra-year drop for the markets. And so in any given year, most years, the markets actually go negative for its annual return. In fact, the average intra-year drop between 1980 and 2022 was 14%. Yet, despite being down 14%, when the markets go down 14%, people start panicking, right? People start, worrying, and it's on the news. That's a big deal. Even though on average it happens every year, but even though it drops 14%, the annual returns were positive 32 of the 42 years. So those are pretty good odds, right? Yeah. It's not bulletproof, right? And that's why we say, if you're going to invest money, you need to make sure you've got a time frame, because sometimes those can be big dips and we need enough time for that to come back. But on average, you're seeing positive returns 32 of the 42 years, despite each year going down 14%. And so that's, oftentimes, right, if the market's down 10%, that's probably a good time to buy.
Yeah. Very interesting. I love Instagram financial pros. Oh my gosh, because they all have the wildest ideas on how to do all the things. Do you guys pay attention to the Instagram financial pros?
Not really.
No. I'll have to send you some links. But there's plenty of them that say you need to have, before you go full time in your business, you should have this, and this. And they all vary, right? Because it's all personal. But Rex, do you have some guidelines or something that maybe, someone's working a side hustle and they're making some money and then they want to do it full time? Like what's some advice that you could give them?
I will.
I will.
I think before I answer that, one of my favorite sayings that Brandon and Dan always kind of kid me about is when you're dealing with kind of internet sleuths and professionals and gurus and things like that they're rarely in doubt, but they're frequently wrong.
Oh, they're very confident. They're very confident.
Right. They're rarely in doubt. Rarely do they, right. They're highly confident, right? And yet they're frequently wrong, because people try and apply it to their personal situation. And yet typically they're very generic and general recommendations, right?
Interesting. Yeah.
So Man, I said that, and then your question was side hustles. Was that right?
Yes, yeah,
Sorry,
side
I got
hustles, and
distracted.
yeah, what type of savings or income from your side hustle would you feel comfortable with before someone quits their job and goes full time?
So I think it depends on your stage in life, right? If you're in a young family, you have 2 or 3 kids that you're providing for, and it's a single income family, then you need to make sure that you can still provide for your family before you quit a benefit paying job and go and follow a side hustle. I think oftentimes on a side hustle as well, it can be confused with a hobby. And the difference is that one is profitable and will continue to grow and lead to profitability and provide income, and the other is a passion for no real income and no real growth and no real return on your money. And I think people frequently get that confused. The beauty is when those two get married, and you have a passion, and you have a hobby, and it turns into the side hustle, and it turns into a business. And that's when magic happens, because then you've got all those things aligned to where you've got your passion, you've got your interest, and it's becoming profitable, and you can turn that into a business, and it can grow beyond just your income and beyond that side hustle. So I don't know that there's a hard number that I would throw out there that says, oh, you've got to make X, because sometimes I think it's okay to take that risk before it can fully replace your income. And sometimes I think that stress and fear is positive and drives positive results and drives you to work harder and smarter. And sometimes I think that fear can be debilitating and can freeze somebody to where they not only fail in the business, but then they start to fail in their personal lives as well. And that's what you don't want to have happen.
Dan, you have a spouse, I believe, who runs her own business.
Yes.
What's it like living, with, I mean, you sort of do too, but she has a more traditional side of the business. What's it like living with someone who is an owner operator of their own business with employees and everything? And then how do you work together as a family to make sure you're all heading in the right direction?
Well, we know the third week in May, that weekend, there's a big dance recital, and everybody has all hands on deck. Everybody helps. Okay, so we know that kind of part. We learned that when we were first married, and my kids learned it all the way as they were growing up. So, but it is a passion. My wife has a dance business. It's a passion of hers, and she loves it. She loves the teaching the little girls to dance. Most cases, little girls. There's a couple of guys, but she loves the kids, and she is determined every morning to get out and go to the dance studio.
Mm-hmm.
She has a lot of employees now. There's 6 studios. It's a bit turned into a really big business, and started out very, very small. And over the last 40 some odd years is grown into a incredible business. And my daughters are involved. Hopefully they'll start taking over more, but they have young kids, and it's difficult because it is a 24/7 business. She's fielding calls on her cell phone 9 o'clock at night sometimes, and 7 o'clock in the morning. So you just don't know. But it is a love that she has. It's a passion. And if she takes a couple of weeks off, she gets bored out of her mind, and she wants to go back to the studio. So
one of the benefits is that you can involve your family. You can pass it on to the next generation.
Absolutely.
Yeah.
Our whole family, my sons and their wives and my daughters are all involved in this business, and it is something that we're pretty proud of. She's done a great job. My wife has done a great job building that business.
Rex, how do people get out of their business? They're like, okay, well, I did a good job building my business, like Dan said his wife's doing, and it's like, okay, now what do we do? How do we sell it? How do we move on? How do we take the money out of it?
Well, hopefully it's not bankruptcy.
Jeez. Yeah.
So I think that's tricky as far as how you get out. And I think that's a gap that a lot of business owners kind of avoid and put off. And yet it's such an important piece of the business as your exit strategy. And so I think when you're looking at getting out of the business, you need to look at a couple of things. Am I going to, is it going to be bought by family? Is it a multi-generational business? And we can talk about that for a minute, because that has a lot of pros and cons to it. Am I going to sell it on the open market? And there's a number of business consultants in every state that do that. Depending upon the size of the business, you may engage with middle market or large market mergers and acquisition groups. depending upon the size of your business. On top of that, you may do an ESOP, an employee stock ownership plan, to where you sell it to the employees. And so there's a number of different ways to exit out of the business. But I think having a lot of foresight and starting to think through that, the earlier the better, so that you can kind of start putting the pieces in place for when that eventuality is going to happen, and you can start kind of grooming either leadership or the culture within the business for that transition, so that the last thing you want to do is have that transition happen and then lose all of the customers and then essentially the deal falls apart and the business goes away. So that's hard.
The key is that it takes a lot of time.
Dan's internet's having a tough time. Dan mentioned that it starts as a passion. And if it starts as a passion, a lot of times the passion is, like in his case, they just want to own a dance studio. And the last thing they're thinking about is selling it. And so Rex, beginning with the end in mind, I mean, maybe that's something you should often put at the beginning is, okay, well, I want to own a dance studio, but now what do we do when it's time to sell? And how do we put that in the plan at the beginning?
Yeah, I think having a little bit of the end in mind is good. And it does take a lot of time. And business owners, this goes back to working on the business versus in the business, right? A lot of business owners have a hard time taking a step back and saying, okay, I need to take, like for instance, in my business, right? In Plan with Baxter, we try and take a couple hours every week to work on a different part of the business, to work on a different part of the business as a team. And so we have our business broken into 4 or 5 different kind of segments that we're kind of focused on, and we try and improve the processes. We try and improve, those different pieces. And part of that is looking at practice acquisitions. It's looking at exit strategies. It's looking at retirements as far as, Dan's getting closer to that stage. And so looking at what does this look like as Dan's looking to retire, and what's his exit strategy. And I think every business owner needs to do that, needs to take the time to look at those, because there's a lot of options, but the longer you wait, the fewer options are available to you. Yeah. And the higher the likelihood of failure at the end. And the business either failing or you not being able to maximize the return on the exit, either one of those.
Dan, we got you back. You want to cover your point again?
Yeah, I was just going to say, when Rex was talking about having an exit strategy and having an idea about how to exit the business, don't think you can do that in 6 months or a year or even 2 years. It should be a plan that's out 5, 6, maybe even 10 years before you actually pull the plug and want to be completely done. I would just caution people about that.
Sounds good. Rex, as a business owner, you can use businesses to purchase things under the business. There's some advantages there that you can do for that. And I think something that's rarely put into the budget in the beginning is purchasing some retirement accounts for yourself. And so, what would you suggest as far as a small business owner goes, as to maybe putting a line item in their budget that this goes to their own personal retirement, or building a 401k for themselves and their employees? Like, how would you do that as like a line item?
Yeah, I think it's always interesting, because we are big fans of paying yourself first, right? Mm-hmm. And that goes right along with being a business owner. And yet the reality is that the most business owners feel like, well, I am paying myself first. I'm just putting it back into the business, and my business is my retirement plan. And that's great, except for it's illiquid, and it may not, sell for as much as you want, when you want, or when you need. And so, we do feel like that there should be a line item in there to begin saving right at the beginning, and at least maxing out your retirement, your IRA accounts, and then expanding that into a business retirement plan as the business starts to get the revenue that can justify that. The unfortunate part is lots of times they'll just start, they're putting the money into the business, and then they'll just start pulling money out to sustain life. And and they just pull out more and more and more instead of saying, okay, I'm going to make sure I'm funding the retirement accounts. And so lots of times you'll get a CPA that will start encouraging that from a tax standpoint and say, hey, look, you're starting to generate enough income that we're getting into a higher tax bracket, and this is one of the tax deductions that you can take advantage of. But by then we've already lost, maybe 10 years of compounding or 15 years of compounding. And one of the wonders of the world is compound interest and starting early. And we want to make sure that we're taking advantage of that as early as we can in starting the business, and yet still allocating enough revenue and resources to the business to grow it. And so there's definitely a delicate balance there.
What's the difference between pulling it out and putting it into your own retirement and putting it in the business itself, building an equity portfolio for the business?
Well, I think a couple of different things is one, your business, you're not in full control of your business, although we all like to think so. There's a lot of market environments and outside pushes on your business that you can't control. And so if something happens and that business fails and goes under or struggles for multiple years, then we want to make sure that we have other resources and other avenues to lean on if we need to. And that can be those other retirement accounts or non-retirement accounts in savings. And if we dump it all in, again, concentration is the number one builder and destroyer of wealth. And so if you concentrate all of your money into that business, you may be one of the ones that is very, very successful. And if you are, well, obviously everybody's going to be your biggest cheerleader and best friend. However, the odds are against you, right? That a lot of businesses fail, especially during those first couple of years. And so we want to make sure that we can bridge those gaps either between businesses or between a business and a career job, whatever that is. And we want to make sure that we have other resources.
Are there businesses that are better than others that you would suggest, Rex? Have you seen some types of businesses that flourish and others that are just harder to do and harder to make profitable?
I like the ones that make money.
Stick with those. Stick with the ones that make money. Yeah.
No, I think they're just different. I don't know that one is better than the other. I do think that some have the ability to grow on larger scales. And I think some are more of just, they're going to generate a great income for you, but it's not necessarily going to scale and have a large capacity, right? You think of a dentist office as an example, right? That dentist office is going to be a great income. It is a good business, but it's very difficult to run two different locations as a dentist office because you are a big part of that product. Now it can be done. And there are some examples of, multi-locationed offices like that, but not every business is going to be like that. So part of it is, what do you want? Are you wanting a business that's just going to generate a good income and a good lifestyle and the freedom for you to go to your kids' soccer games? Or are you wanting to grow something larger that you can sell and down the road and expand or franchise out or whatever the case may be? And so a lot of it comes back to that end in mind as to what you're trying to do.
I had a professor, I took a class up Weber State, I don't remember the class, but the professor said, because I thought professors made all the money in the world, he said, everyone on my block besides me are all business owners. And I remember that. And I thought, wow, that's crazy. Dan, what did we miss here? We got to bump out of here. Anything else you want to add on owning a business as part of your portfolio?
No, I think we've covered it pretty well. There's pros and cons to own your own business. It depends on making sure that you're doing what you love and you continue doing it. And it is a business, not a hobby, that you can actually come up with a good exit strategy so that you do have the income you need to replace when you sell the business. That's the key, in case you can't sell it as much for what you might think it would be worth.
Brandon, if you could own any business in the world, 100%, it's yours. What business are you buying?
Probably Plan with Baxter. the Baxter, Nelson and Associates. I've had my eye on that one.
Good idea, Brandon.
I like it, Brandon. Shoot for the stars.
But I did one last comment. A well-run business, you think about it, right? You build the business component, you buy real estate, and so you got the real estate going, and then you start an investment or retirement investment account with that business. I mean, you can literally have all three of Rex's pillars of wealth in one area, right? And that provides, and do some people just run the business and that's all they have and they sell it at the end and it works? Sure. Do some people just do real estate? Sure. Do some people just do the markets? Yeah. And each of those can work. But man, when you put those three things together, the stability and the liquidity and there's such synergies in that trifecta, and owning a business really, I mean, between the real estate, between the business, and between the equity markets, small businesses can really help build that for you.
I mean, the only thing you're missing is a bunch of grant money from the federal government. So
that's true.
That's it.
Depends on what kind of business you run.
Yeah, that's true. Listen, Rex helps us out a ton. So if you want more information on Rex and his team, planwithbaxter.com, and you go straight to the source there. So planwithbaxter.com, chat with Dan, Rex, and Brandon, and then you're in good hands there. They are business owners, real estate investors, and of course, equity investors as well. So they know all of the things. That is it for this episode. Thanks for joining us on Through the Pines, helping you use yesterday's dollars to finance tomorrow's dreams.